Skyworks Solutions, ticker symbol SWKS, is a semiconductor manufacturer with over 60% of its business in the mobile-related sector. Its stock price has plummeted 50% from 2 years' highs. So does this mean there's a buying opportunity with the stock undervalued right now? I strongly believe it is. And in this video, I'll outline my reasons for why SWKS is my contender for a high conviction trade for stock options premium sellers and traders of the wheel strategy. Before going forward, please understand that this video is made for entertainment purposes only, and none of what I'm about to say in this video constitutes any financial advice. This is my own opinion about a publicly traded company, and I urge you to research it yourself before you make any of your own financial decisions. So with that in mind, my potential trade for next week is to sell to open a put option contract at a strike of 95 with an expiry date of June 30 at a potential premium of around $1.20. Okay, so on to the analysis. Skyworks Solutions Inc. is an American semiconductor products designer, developer and manufacturer and markets its products in the United States, China, South Korea, Taiwan, Europe, the Middle East, Africa and the rest of the Asia Pacific. Its primary market is for radio frequency semiconductors for mobile phones and supplies the likes of Apple, Google, Cisco, Orange and Verizon. And it is within this industry that continued growth is expected, especially as AI usage is set to increase. Skyworks Solutions is the 34th largest semiconductor company in the world based on market cap, which is over 16 billion. Its origins go back to 1962, where it was a startup in the microwave industry. It has since diversified and gone through many changes and names until it became the multi-tech company that it is today. It employs around 11,000 staff in 17 countries throughout its various segments and has produced more than 7,600 unique products. As you can see, Skyworks Solutions stock price has flown up since its IPO on the Nasdaq Stock Exchange in 2003 by an incredible 9,000%. Looking more recently, its stock price over the past 2 years has almost halved due to the fallout issues caused by the COVID pandemic. The past 12 months has seen a slight improvement of around 0.5%, and year to date it has seen a recovery of over 16%. So, how about its performance outlook and why have I shortlisted this stock? Skyworks sees its analog and mixed signal semiconductors taking a larger share of the wireless networking mobile industry in the coming years. Currently, the semiconductor market is down slightly due to recent weakness in Android-based devices. However, this is set to recover in 2024, with forecasts showing increases in 2024 and beyond. The Semiconductor Industry Association clarified this in a recent article titled, "Despite short-term cyclical downturn, global semiconductor market's long-term outlook is strong." And they add that, while the chip industry is notoriously cyclical and experiences brief periods of weakness in the short term, the long-term prospects for this critical sector are extremely bright. So the semiconductor sector is not quite out of the woods yet, with demand expected to remain low until next year. So should we wait until 2024 before considering trading this underlying stock? According to Skyworks Solutions Chairman and CEO Liam Griffin, the market downturn in semiconductors has already been baked into the stock price. As he states, "We do believe that we are going to come out of this downward cycle and the stronger companies will outperform and will be one of those. Therefore, stock prices should start to recover based on future market growth prospects." In addition, the CEO looks forward positively, saying, "The opportunity for us is vibrant and compelling," and he outlines two huge future opportunities. Firstly, connecting the unconnected. 2 billion people are currently without connectivity out of 7 billion in the world. For example, in India, there's an enormous opportunity in developing connectivity with their chips. And secondly, AI. This is an amazing future prospect for Skyworks, as AI requires a very high level of processing power. Skyworks Solutions' CEO states, "Bringing in AI, it's going to happen. It's going to change the game. It's great for us because we are the company that knows how to make that work." So indeed, the future looks bright for Skyworks Solutions if they can capitalize on these future prospects. There appears to be rising positivity in the news for SWKS at the moment. Searching for reasons behind the stock price drop over the past 2 years, Simply Wall Street finds that Skyworks Solutions actually saw its earnings per share improved by 15% per year. And that revenue is actually up 17% over the 3 years. So the share price drop doesn't seem to hinge on revenue either, concluding that it might be worth researching Skyworks Solutions more closely, as sometimes stocks fall unfairly. This could present an opportunity. They also highlight that Skyworks is trading at 27.4% below their estimate of fair value, and that earnings are forecast to grow 14.41% per year. It also notes that Skyworks is trading at a good value compared to peers and industry. Zacks looks into the radio frequency semiconductor industry for future prospects and concludes that continued high spending on the deployment of 5G networking is a catalyst. Seeking Alpha are also bullish on the stock, recently stating, "We continue to be buy-rated on Skyworks Solutions. We expect the company is well positioned to outperform the peer group in 2024, driven by content growth with Apple Inc. and volume growth at MediaTek and rebound of Android smartphone demand next year after rigid inventory correction cycles." Furthermore, 20 analysts' stock price targets for SWKS at TipRanks shows an average upside of 8.75%, with the most optimistic looking for a 30% increase. 12 of these analysts rate the stock as a buy. So, for option sellers, we need to be both confident in the short-term and medium-term prospects of the stock. Short-term, so that we can earn good premium from the underlying stock without getting assigned, and medium-term, so that if we do get assigned, the stock will rebound and we'll be able to sell calls until the stock is exercised away from us. Medium-term looks good, as I mentioned earlier, with the semiconductor industry looking to perform well in 2024 and onwards. But how about in the short term? Let's look at the charts. Okay, so here we have the daily chart showing the past 2 years. SWKS had plummeted by over 60% due to the pandemic and the issues it caused for the semiconductor industry, but has slowly regained some of that drop. There is obviously a huge potential of recovering back up towards 2021 levels, but more realistically, a recovery of half of that drop would still provide us with plenty of upside. On the 1-year daily chart, we can see an upwards movement more clearly. There's a nice upwards channel forming with the stock showing potential of growth. Looking over the past 6 months, the stock has been bouncing nicely off the +2 and -2 standard deviation lines and is now sitting nicely just above the -1 line. The recent earnings report was a slight miss, but with a beat on revenues, and this has translated into a slight rebound in price. When a stock gets beaten down like this, it is often a great place to consider opening a trade, especially in SWKS's case, with the positive industry outlook for 2024 and the potential that this year's continued fall in industry demand is already baked into its stock price. Also of importance, the stock price is finally showing it has traded over the 200-day simple moving average for the majority of this year, and it has just pushed up through it again, showing it wants to trend above it. We want to trade stocks that are above this line of death. Okay, so we can see potential on the charts, but how about in its figures? Looking at some key financials, we can see that price to earnings is just 14.45, which is almost a third of the industry average of 35%, which is a good start. They also issue quarterly dividends at a current rate of 2.36%, and they've just paid out their most recent dividend at a rate of 0.62 per share. So if you own 100 shares, that would equate to $62 for that quarter. Looking at revenue growth, we can see that revenues have increased nicely since 2016, especially since 2020, rising more than 50% since then to over $5 billion. You can also see comparable increases in gross profit and operating income, and net income is easily positive and has been growing too, although it's taken a bit of a hit lately, impacted by the pandemic and its repercussions. Onto their balance sheet, and their current assets outweigh current liabilities by almost 3 to 1, indicating we have a very stable company here. They also have $586 million in cash, which would more than cover their short-term debt, so they're in a strong financial position. Over to free cash flow, and as you can see, they have a sizable amount of cash on hand of $1.26 billion. And according to Skyworks CEO, this will remain high, saying, "We're going to deliver $1.1 billion in free cash flow this year. We're going to deliver $700 million to our shareholders in dividends and buybacks this year." Again, this looks very good from an investor's perspective. And just a quick couple of stats. EBITDA margin is in the 39% range, which is extremely good. The S&P 500 average is around 10 to 16%. Return on equity is also good at 20%, higher than the S&P's average of around 14%. Return on capital is nicely over the 10% minimum expected, and debt to equity is well under 1, indicating that the company is easily funding the majority of its activities. So, all in all, this gives me great confidence in the financial health of Skyworks Solutions. We want to select companies that can survive in times of economic hardship and thrive when things are good. Okay, so let's talk about timing the trade and where to set our strike price and expiration date. So back to the daily 1-year chart, we have some strong support lines below the current price at the $103, $100 and $98 levels, as well as the $95 level for our potential strike price. Looking closer at the 6-month chart, we can see that the price has pushed nicely above the 200-day simple moving average and also the 9-day simple moving average, indicating good price strength. It is also closing in on the 50-day simple moving average and will hopefully push through that in the coming week. So, as long as the underlying price remains above the 200-day simple moving average and the 9-day simple moving average, it will give me great confidence to open the trade early next week. Okay, so on to the strike price. We'd want to set our strike price below those. Looking at the 6-month chart, we can see that the current underlying price closed at $105, which is just above the -1 standard deviation line. We would usually look to place the strike around 1.3 standard deviations below the current price. So that would put us here, the $95 region. Okay, so looking at our wheel tool, we can see that this represents a 10% drop in price, and by selecting an expiration date of June 30, it would give us a decent return of around $120 in potential premium, giving us a premium annualized figure of 14%. Back to the chart again, and we can also see that the underlying price is pushing above the 9-day simple moving average. So this is potentially showing confirmation of price momentum upwards, which is also a good sign for entering a trade. The 14-day RSI is hovering around the 50 line and has been on a slow movement upwards with plenty of room before being considered oversold. Finally, looking at the option chain for our trade, we can see that on June 30 at the price of 95, delta is 0.166, which is good. It should be below 0.3 or even better below 0.2. So come next week, I'll be following this stock closely, watching for the price momentum to keep it above the 200-day simple moving average and also the 9-day simple moving average. And if this happens, I'll be opening the trade. And there we go. Hopefully that was a useful and informative video. Please let me know if you want more trade idea videos in the future down in the comments below, and also please like and subscribe to receive more options trading ideas videos. If you enjoyed this video and want to see more option trading videos, head on over to our website at wheeloptiontraders.com. Here you'll find our options wheel strategy trading video course. We have over 50 videos and counting, from the basics of understanding and trading options through to using the wheel strategy to get the most out of your options trading. We also have an amazing options wheel strategy tool that you can download. It tracks all your trades in real time and provides key insights to help you with your options trading decisions.